The dollar is dead. Hi, I'm Brian. If you're holding on to dollars and they're sitting in your bank account, you're probably losing money. Why? Because of inflation. Let's discuss what you can do to protect yourself and your hard-earned money. Please like this video and leave a comment down below after you watch the whole video. We're going to talk about commodities and prices at the end and why it matters. I'm going to discuss why the dollar is dead, at least in my opinion. If you agree, disagree, leave some comments. I'll get back to them as soon as I can. What do I mean when I say that the dollar's dead? Well, to me personally, and I think many others, the dollar now is just merely transactional. And let me explain. There needs to be a mindset change, or at least I would challenge you to change your own mindset as I've changed mine. And that is that, for example, let's say that you have $100 a year ago. A year ago, at your job, you made some money, you saved some money, you had $100 in the bank, and at that point in time, you could have bought a pair of shoes that you wanted, a particular pair of shoes. Now here it is a year later, you still have $100 in your bank, but because of inflation, meaning the price of goods have gone up, those shoes are now $110. You look in your bank account, you have $100. You've lost purchasing power, you can't buy the shoes anymore. Because of inflation, the shoes have gone up. Now, the reason it's sort of difficult for people to get this new mindset is that when you think about it, you're thinking, oh, okay, I've got $100 in my bank account. Here it is a year later. I still have $100. I haven't lost anything. I had 100. I have 100. It's the same. Well, no, it's not because of inflation. And that's where people can get confused. And I'm sure the government wants you to think that way. You've lost nothing. You still have $100. Yeah, but those shoes are more expensive because of inflation. So what have you lost? You've lost purchasing power. Well, let's not lose purchasing power anymore. The new mindset is that the dollars that you get, you merely use to transact with when you need to use them to transact. Let me give you an example. At your job or your business, you make your income, you put it into the bank, and it sits there in dollars. You go to the store, you might use your debit card and pay for something in dollars. You've got dollars, you're paying in dollars. Now those dollars are losing their value because of inflation. The government racks up debt, the government decides to print more money, and now the money you have is worth less. That's not good. So what do? Well, what if you took the dollars that you got from your job or your business, and when they went into your bank, you moved them into something else, a different asset, so that those things can generate income for you or go up in value, or they're a store of value that will go up in value. So let's talk about that. The dollar is not a store of value. What does that mean? Well, because of the fact that there's inflation, the value of the dollar is going down. So people call things like gold, and we'll talk about different instruments, they call gold an inflation hedge because they say it's a store of value. You change your dollars into gold, the gold goes up in value, and therefore you don't lose that purchasing power. I have a video that's very straightforward. I'll put a link in the description that talks about the fact that $100, 100 years ago, you took your $100, you stuck it under your mattress, 100 years later you have $100. You take that same $100 100 years ago and you bought gold. Today it would be worth $10,000. Even if you compounded it with some interest, average rate of return, even if you took out taxes when you made money on the dollar, and even if you took out taxes on the gold after you sold it, we're still talking about the $100 being worth around $2,000 and the gold being worth around $7,000. So you were better off storing your value and holding your asset in gold than you were dollars. Okay, what does this all mean and what can you do? So the money hits your bank account. You can do a number of things. Some people will say, okay, well, to combat inflation, I'll just put it in an interest-bearing account, or I'll put it in a certificate of deposit, or I'll put it in a T-bill, a treasury bill, a bond bill, or note. What are those instruments? Well, essentially they're cash equivalents. You're locking up your cash. If it's a checking account, it's not locked up and it's earning an interest rate. If it's a certificate of deposit, you're usually allowing the bank to hold it for a certain period of time, and they'll give you usually a higher rate than just sitting in your checking account. Then you've got bonds, bills, and notes issued by the U.S. government. different terms, usually longer term or bonds, 10-year, 5-year, the bills being the 2-year, the 1 year, maybe a 5, and then the notes are the shorter term, like 13 weeks. Now, those are all dollar equivalent. You're just locking up dollars and you're hoping that the interest rate you get will be higher than inflation. So therefore, if those shoes went up to $110, you're hoping that you're going to end up getting $111 on that certificate of deposit or the interest you're getting. Typically, because of inflation the last couple of years, that's not the case. Not only do you have inflation, but you have to pay taxes on what you've gained. So that's one way of moving money and trying to keep some value there and trying not to lose too much purchasing power. But then, and this is what's really interesting, there are other ways, and let's talk about liquidity. Other things you can do. Stocks. You can take your money, you can turn it into a stock. Hopefully the stock appreciates, and the stock may even have a dividend. A lot of people do that. Now, liquidity is an issue if you need to use the money right away, like at the end of the month. You would have to buy the stock when you get the money, sell the stock when you need the money, and you may or may not have made appreciation. Now, those are considered more of a long-term thing. If you don't need the money the next couple months, you're putting it into something like that. Next, let's talk about gold and silver and people store value there. Now, gold, and I have a video about this, there's multiple ways you can buy it. You can go buy a physical piece of gold. But then when you sell it, you've got to find a buyer to purchase it. There's going to be a difference in what you paid versus what you're getting. Short term, that's usually not a good thing because of the difference in price. Gold can go up and down in price, and it usually doesn't move all that fast. So the odds of buying it today, selling it a week later, and making a big profit, probably not going to happen. You've got transactional costs and fees. Then you could also buy gold as an ETF. You go to your broker, you purchase the gold. You purchase the share of the ETF. The ETF holds the gold. You can sell an ETF all day long, depending upon the price. So you can quickly convert that back to cash. So you take the cash that you got, convert it to an ETF that holds gold. Now you're holding gold instead of cash, and then converting it back to cash when you need it. Again, there's some liquidity and issues with it going up and down in price. Then there are other services, one that I use, that will buy gold for you on your behalf and they hold it. And you can I use an app and I can buy and sell the gold whenever I want, and then I can ACH the money around. Well, why is it that I say cash is dead? Well, it's easier now through ETFs and through services that will hold the gold or silver for you, the custody services. It's easier to transact and turn things into a commodity like gold or silver and back, or into a stock and then back, or into crypto and then back. And I believe crypto is the dollar killer. And here's exactly why. Coinbase has a debit card. Now, you can move your money. Let's say your payroll goes in at the end of the month, end of the week, and it goes into your bank account. You had a couple $1,000s after taxes. You can move that, like we mentioned, into a CD or something. You can move it over into custody or an ETF for gold. You can move it and buy a note, but you can also move it to buy a stock. Now you can move it into a service like Coinbase, and you can turn it into crypto. Coinbase will hold your dollars in US dollars. They will also hold it in a coin, like a USDC, which is a US dollar coin, is what they call it, that is pegged to the dollar. So you can buy and sell it. Now, the beauty of having it in something like USDC is that in that case, it's essentially the equivalent of a dollar, but it's not really a dollar. So you're not holding dollar. It might give you a return, but again, it might just be like a regular checking account. So not a huge value there. Here's where it's interesting. You can take that and you can buy, and let's just say Bitcoin. Bitcoin is considered to be, if you will, the gold standard. Gold is a store of value. Many people call Bitcoin a store of value with properties better than gold. You may agree with me, you may disagree with me. That's the way I see it. So if I moved it into Bitcoin, I could then move it out of Bitcoin when I need to, because I want to then spend it. Here's what Coinbase does, which is great. Their card is actually a debit card, and it's a Visa debit card. So anywhere Visa is accepted, you can use it. So I can go use my credit card somewhere, or my bank debit card using dollars, or I can use my Coinbase card, and I can actually have it pull crypto. So how does that work? Well, I buy, let's say, Bitcoin. So I've turned my dollars into Bitcoin. So I said, thank you for my money that I just got from my job or my business. That's great. Dollars, I don't want them anymore. I want them to go away. I want to use the dollar killer. I'm going to buy Bitcoin. Bitcoin, hopefully, it can go up and down in value. Hopefully it goes up in value. Over time, people believe it will. Some believe it won't. But you can tell the Coinbase card, hey, when I buy something with my card, because it's a debit card, not a credit card, it takes the money out immediately. Take some Bitcoin, convert it to cash for whatever I need, the $100 pair of shoes, and then pay that merchant in cash. There isn't a transactional fee, but there is a fee like a spread fee. So there will be a spread just like a stock. When you go to buy a stock, it has a bid and an ask, what you're selling at, what you're buying at, and they're different, obviously. So there's also a spread when it comes to something like Bitcoin. But what I find fascinating about this is that you can go ahead and you can buy Bitcoin or Ether or any other crypto that they support, and it will convert, and you can tell it, convert that crypto. So you might have $1,000 in Bitcoin, $1,000 in Ethereum, $1,000 in Cardano, whatever it is. And you might say, you know what, when I use this, I want you to pull from my Cardano because it's gone up in price. Or maybe you switch it. You can go in and switch it and say, you know what, now pull from Bitcoin. So you can do that and it'll make the change right there on the fly. Now, if you wanted to, you could convert a chunk of Bitcoin to cash and move the cash over to your card. So you might say, ooh, look, Bitcoin's really up all of a sudden. I'm going to go ahead and convert some to cash, the cash I need for the next month or two expenses. So to me, this is the dollar killer, and this is why I say the dollar's dead. The dollar's dead because of inflation. Because the government is in debt, they're printing money, we're getting inflation, they want you to hold dollars, but you can say, you know what, I'm not going to participate anymore. I'm going to put it in commodities, I'm going to put it into stocks, I'm going to put it into crypto, and I'm going to be able to use it as fast as I want, or easily and quickly. So now let's take a look at the prices of various commodities and treasury bills and notes and crypto, because you may want to move into this week or next week, whatever it may be. I take a look and I do it. I try to dollar cost average and buy these things on a regular basis and convert them back. So I'm looking at this all the time. So I intend on doing a weekly Dollars Dead show so we can keep up with where these commodities are and how they're doing with comparison to the dollar. So here's a site I like to use because it's got the current right now. This is Friday, February 2nd. The gold price here, current gold price, current silver price, etc. I always look at gold, I always look at silver. And then cryptocurrencies, they always start with Bitcoin, Ethereum, and they have some of the other top ones in the USD coin I discussed, which is $1. So right now, February 2nd, gold is at 2,046, silver's at 2,283, Bitcoin's at 43,000, Ethereum, which I also purchase as well as others, Ethereum's at 2,298. Now, we could look at this week to week to see how these prices vary. I like to purchase every week or every 2 weeks. That way I can dollar cost average these items. And then let's look at the treasury note. The 10-year is what they always look at and always discuss with relation to mortgage rates and other things. The 10-year note on this Friday the 2nd is 4%. So inflation has been running, it depends on where you look. I think it's around 3.5%, but it's really probably more like 8 over the last year. And on many items, it can be even higher. So those are the prices of the commodities, gold and silver, what I would call commodities, Bitcoin and Ethereum. And of course, Bitcoin I would call a store of value, just like gold. And then if you wanted to put it in a cash equivalent to get an interest rate, I don't think you're beating inflation, but there's the current rate. So that's it. I hope this video has helped. I hope it helps change your mindset about dollars. Is it really a store of value? Do you really want to have all your money sitting in a bank in dollars, or maybe move some of it to commodities such as gold or silver, or crypto such as Bitcoin and others? Or do you just want to have it sit there as dollars and take the risk that you're going to lose purchasing power? Everyone has a different opinion. That's mine. I believe the dollar is dead and it's merely transactional. Thanks for watching. I'll try to do a show every week and we'll update on different commodity and crypto prices.